I want to apologize to everyone for being late. There was a wreck on 35. I thought I allowed myself a whole lot of time to get here, but not enough. Anyway, sorry to keep you waiting. I want to welcome everyone to the July 24th, 2019 meeting of the Committee on Agency Operations and remind everyone that this meeting is being broadcast live via the internet. And the first agenda item is approval of the minutes from the April 24th, 2019 Committee on Agency Operations meeting. Do I have a motion for approval? So moved. By Dr. Farias, second?
Second.
Second by Ms. Williams. So any discussion? Hearing none, all in favor say aye.
Aye.
All opposed? Motion passes. The next item on our agenda is public testimony. We have not received any requests for public testimony, so we'll move on to the next item. The first item under agency operations is report on grants and contracts. This item does not require any action. Mr. Bill Franz, General Counsel, is available for questions. Any questions? All right, the next item under agency operations is consideration of adopting the Commissioner's recommendation to the committee relating to the certification of gifts that are fundable through the Texas Research Incentive Program, the TRIP program for the Emergency Research Universities. Members, you have at your place supplemental materials printed on goldenrod paper. This item would have normally gone to the Committee on Affordability, Accountability, and Planning, CAP, but due to the timing of the cycle, it was not ready for the CAP meeting in June. Dr. Julie Eklund, Assistant Commissioner for Strategic Planning and Funding, will provide a brief presentation and be available to answer questions. Dr. Eklund.
Thank you very much. Legislation for the Texas Research Incentive Program, or TRIP, requires the board to certify that the gifts or endowments received by eligible institutions were donated for allowable research or research-enhancing purposes. I'm here today to bring you the latest cycle of matching gifts. I'll begin with a little background. TRIP was created by the legislature in 2009 to help more institutions become nationally recognized leading research institutions. To be eligible, an institution must be designated as an emerging research university under the Coordinating Board's accountability system, and the criteria are listed on this slide. There are 8 public institutions that qualify for TRIP, and they're listed here. This has been a very successful program. For example, several emerging research universities have moved to Carnegie R1 status since the fund was created, and I put an asterisk by each one that is now a Carnegie R1. This has all occurred since TRIP began. UH was the first, which was elevated in 2011 to that status, and UTEP is the most recent to join that group just in this past year. This slide also shows the matching protocol for gifts. Gifts must be at least $100,000 to be matched, and the state match can be 50%, 75%, or 100%, depending on the size of the gifts. It tops out at $10 million. The program has also been very successful in terms of the dollars it has brought in, and donors, of course, appreciate the opportunity to have their gifts matched. Thus far, $461 million in private gifts have been matched, with just over $361 million in funds from the legislature. More than $760 million in gifts have been received and submitted under this program. And you'll see for this session, $35 million was appropriated. Gifts are matched in the order in which they were received, or in fact, in the order of which the funds were received by the institutions. But they're only matched up to the amount appropriated for this purpose. And as you can see, the appropriations have really varied over the years of the program. This slide shares the review process for each TRIP submission cycle. Institutions submit required paperwork for review. Peer institutions are allowed a period of time to submit challenges. A coordinating board review committee reviews the submissions and notifies the schools of their decisions, and institutions are then allowed the opportunity to appeal a decision to the commissioner. The review cycle concludes with certifications of matches by the board, which is what we're here for today. For this round, we reviewed 43 requests, and peers challenged 16 of those. Of the 43, staff recommended approval of 37. There were 4 appeals to the commissioner, who determined that 3 of those 4 should be funded. The commissioner was waiting on some clarification for one of those appeals when we went to press with the board materials, and he determined that gift should be funded, so we've provided you with supplemental materials today, and these include the final update of our numbers. Overall, we're requesting certification for 40 gifts for matching, And so then here's the final numbers for where we stand. It shows the final amounts in the queue today, and your supplemental materials will reflect today that we're bringing $13.3 million to you in gifts for certification from this most recent cycle. Adding to the approximately $144 million in unmatched gifts, we'll be at $157.2 million that are still waiting for funding. The total of private gifts that have not yet been matched is now over $219 million. And so if you add that to the $461 million in gifts that have already been matched by the legislature, that's about $760 million in qualifying private gifts that have been given to our emerging research institutions since the program's inception. So again, that's the final numbers for where we are today. We've got the $13 million to certify today, added to the gifts that we're already waiting to be matched. We're at $157 million. And as I said, the gifts keep rolling in, so these amounts will continue to increase. I'm happy to answer any questions.
What are your questions or comments? All right, I'm looking for a motion to approve the certification of gifts that are fundable through the TRIP for the emergency research universities. Mr. Anwar, are you making the motion?
Yes.
So the motion by Mr. Anwar, is there a second by Dr. Farias? Any discussion? All in favor say aye. Any opposed? Motion passes. So Dr. Farias pointed out to me that on a previous agenda item, I think it was the approval of the minutes.
Correct.
We're sort of short-staffed today. Thank you for being here, Ms. Williams, but you can't participate.
So she can participate, not vote, right?
Well, I mean, in the sense
I
of
will second that motion
right, and I think we don't have to get too ultra-formal. Is everybody's okay with that? We'll just substitute Mr. Stedman for Ms. Williams on that particular matter. Thank you very much.
Thank you.
Is that satisfactory, Dr. Frias?
Yes, thank you.
Okay.
Thank
See,
you.
Bill, thanks for taking over general counsel role. Bill has stepped out.
No worries, I learn well from Bill.
Thank you. All right, the last item under agency operations is considering adopting the staff's recommendation to the committee relating to amending the board operating policies and procedures. Ms. Linda Battles, Deputy Commissioner for Agency Operations and Communications, COO, will be available to answer questions.
Mr. Chairman, this simply changes the evaluation date for the Commissioner, Internal Auditor, and General Counsel by this board to align with the agency's shift. We used to evaluate employees on a calendar year, the previous calendar year. We're moving into a fiscal year, so we wanted to align the board's evaluation of these individuals in the fiscal year. So you would be doing this beginning in September and then meeting in October with final.
Is it, and that's the only change?
Yes, sir.
All right.
Yeah, and just by background, the policy, I think, before was we were going to review in July, and actually Raymond had already reviewed, I guess, general counsel and auditor, and I'm like, well, if we're going to do that, but why don't we just do it in October and make it consistent with the fiscal year? So I think that's a better thing.
Good. Do you want to make the motion, Mr.
Oh,
Stedman?
yes,
Okay.
I'll make the motion.
Is there a second? Dr. Farias, any discussion? All in favor say aye. Any opposed? The motion passes. The first item under finance is a review of the fiscal year 2019 financial report to the board. This item does not require any action. Mr. Ken Martin, Assistant Commissioner for Financial Services, CFO, will present this item to the committee and be available to answer questions. Mr. Martin.
Thank you, Mr. Chairman. This item is the quarterly report, which I provide to each one of you during this meeting. And typically, what we talked about is instead of going through the detail on the report, just talking about any notable items. I have made some comments on here. I will talk a little bit more in detail about a bond sale. One item that's not listed on here that I did want to note, if our graduate medical education program, our GME program, it has about $4.4 million showing available budget. We anticipate, in working with the division, that'll be about $2 million remaining. It's on, but I'll get a little closer. Can we turn this one up? And so within the graduate medical education program, a permanent fund was established approximately, really need to get close to this. Permanent fund was established approximately 4 years ago. And last year was the first year we started receiving distributions, earnings from the permanent fund. So basically the corpus remains the same, and then the earnings come into the program. So the good news is we'll spend all of about 3/4 of the funding for this program as general revenue. We'll spend all of the general revenue and the majority of the permanent fund. Any unspent funds will remain in the corpus of the fund, so they do not lapse or lose those. And the other item was a bond sale. So in April, you all approved a resolution, bond resolution, to refund our 2009 series bonds, of which we did. We closed on June 26th. And I'm pleased to announce that it was very successful in timing. Anybody that watched the market would see that 10-year Treasury and interest rates had gone down substantially since December, January timeframe. We had $55 million of bonds that we defeased, and we have realized about a 2.12% true interest cost on the bonds that we sold, so dramatically lowering our interest cost over the life of the remaining term of those bonds that we issued. The savings was around $13 million, so that's over $50 million now combined on the 2007-2008 series bonds that we refunded back in November. And basically refunding is refinancing, paying off old bonds by issuing new bonds, and then by the 2009 combined, so over $50 million of savings that will come in over time. Because each year with a lower rate, it's like lowering the interest rate on your mortgage. You'll realize the savings over the life of that mortgage, but it is good news for the program and savings. So I'm happy to answer any questions on those.
What are your questions or comments? All right. Then the last item under finance is consideration of adopting the Commissioner's recommendation to the committee relating to the agency's operating budget for fiscal year 2020. Mr. Martin will present this item to the committee and be available to answer questions.
Thank you, Mr. Chairman and members. As we're pulling this up, just to give you some background, after every session, we get the conference committee and eventually the General Appropriations Act. That is for 2 years for the biennium, and we establish an agency budget for the 1 year. The agency is committed to transparency. We want to make sure we have full board involvement of all the activities, financing, where a source of money is coming from, how it's being utilized. Any important activities, new programs, et cetera, and you've been hearing dialogue about the legislative session and other items that transpired in some of the committee meetings, and to continue the open dialogue. And so let me go through a little bit about what I'll call the budgetary fundamentals. So let me, how do we get here? How do we get to the agency operating budget? We start with a base budget that's in development for the legislative appropriation request. And the base budget is typically flat funding. But we have seen times where the governor may announce a budget cut and want us to actually take our base and reduce it, I think 2 biennium ago, about 4%. And then we developed the legislative appropriation request. That is our base budget, our starting point, plus our exceptional item requests. And we've come to the board previously and had discussions about which items do we want to prioritize, what do we want to request additional funding for, make attempts to, as well as any other capital items, et cetera, that we break out in there. And that's really the request that we submit to the Legislative Budget Board that starts off our legislative session, if you will, and all the discussions on funding. And then we have the session and we get the outcome, and eventually it turns in the General Appropriations Act, which is for 2 fiscal years. So the GAA that will come out that starts with the conference committee version will be for 2020 and 2021 fiscal years. It's basically the conference committee, House Bill 1, that's out now, any contingency appropriations or plus or minus, especially a minus if it's a veto. What we do is we establish an agency operating budget for each year, but we don't develop both years at the same time. We do each year just before so that we have the most up-to-date information as we're making these operating budgets, making our operating decisions. So for this case, what you will be reviewing and hopefully approving is the fiscal year 20 operating budget. And then next April, we'll come to you for the fiscal year 2021 operating budget for approval for that. And separately, as we just discussed with the financial report, that really is the next step. So how does all this align? You start with your base budget, you put in your legislative request, you get your answer, what your funding is going to be, and now we go execute. And our agency operating budget is that point of execution. And then we provide your quarterly report, and that's how are we tracking to the funding that we have? How are we spending the money? How are, what programs do we have, et cetera? That's what this report that I just presented is for. And then within our budget, we have different methods of finance. So if my background prior to the state was corporate. And in corporate, you have a dollar. It's green. You have one source of money, and you can utilize it for anything. But in government funding, you have many different sources. So you have general revenue, which is typically tax revenue. You have general revenue dedicated, which is, I'll give you an example, revenue obviously dedicated to a program. Physician education loan repayment program. Smokeless tobacco tax is, the sales tax is put into a specific account dedicated for the PELRP program and some other medical uses. So that's an example there. And then the obvious ones, federal revenue, any donated money we get from outside entities, loan funds, as we've talked about with our loan program, and any other type of funding that we may be able to receive. We utilize all these funding sources. We want to make sure we're not 100% reliant on general revenue, but we don't want to be, relying on loan funds either too much. We want a balanced approach to our budget. So let me go into the budget itself. The operating budget, and I'm going to break this down. When I say operating, you could think administrative, what have you, and then I'll talk about trusteed, and that's more the programmatic. So the operating, we are requesting $31.1 million, which is actually a $138,000 reduction year over year. Some of the notable changes were we received additional funding, which we requested for national student data, and that was about $115,000. In the loan program, I did mention this a while back, but I'll bring it up again. We had a reduction in credit card fees. So we used to absorb the credit card fee when somebody made a loan payment on their credit card. That was a little over 2%. We have changed that where now the borrower, if they want to utilize their credit card, will absorb that fee, and that saves us about $900,000 a year. Texas Works, we have about $104,000 in administrative funding. That was a new program that we requested, and it was statutorily approved. And other notes, general revenue increased in our indirect admin. We received additional funding, which is great. That helps us not be so reliant on loan funds. And our operating funds to trustee ratio, so how much money are we spending on operating the agency versus we're actually managing for programs, has gone down. So our ratio has improved. We've always mentioned we're a lean organization, and we're leaner. We went from 1.44 to 1.35% going into FY20. And if I touch base a little bit on the programmatic revenue, we have $868.8 million built into this budget. The three notable items are our Texas grant. We had an exceptional item request. We received $40 million approximately each year. Graduate medical education, which I mentioned earlier, $30 million. And a new item was a child mental health care consortium. This is $49.5 million each year. And community college funding as well went up, which is good news because it had been declining a little bit, and they went up $28.4 million. Within our budget, we have authorized 266.9 FTE, so that is actually, our head count is actually driven in the budget as well. We're limited, and in our budget, we have 265.4 that align with those items. 3 FTE are planned in addition to the 266, but they don't go against that limit. Those are for funding we received from Texas TWC, Texas Workforce Commission, for an Advise Texas program. It'll be a complementary program to the existing Advise Texas program managed out of Dr. Booker's area with college readiness and success. And as we talked about, one of the new programs is the child mental health care. We also have on top of that the Peace Officer Loan Repayment Program. That was new based on Senate Bill 16. And then the program I just mentioned with the additional funding and the additional FTE Advise Texas through TWC. So I'm happy to answer any questions. You do have the detailed budget before you. It looks like this. It is a lot of detail, so I did not go through specifics. I wanted to give you key highlights that I thought were germane, but if there are any specifics, I'm happy to answer any questions or walk you through any items.
Questions or comments, Dr. Frias?
So I have a question about the budget in terms of the condition we are with the building. Is this appropriate to bring this up now? But I'm curious about the update on the building.
happy to.
Our lease here, and then the future.
Great.
And how is that addressed in the 2020 budget?
Let me, so there's a couple pieces, so a couple answers in that. It's actually not in the 2020 budget because our current lease goes through June of 2020.
Okay.
So from a funding standpoint, we're okay. But we have had ongoing dialogue with Texas Facilities Commission. It has been difficult to get answers. We have still, though we have, I'll call it, been tapped to potentially go into one of the new state buildings. It has not been confirmed. We have not been formally approved. We are still waiting for what that process and when that will occur, and getting answers has been very difficult. We did request, as a contingency, $150,000 in our legislative appropriations request because our lease ends next June, if we are slotted and approved for one of the new buildings, we need to have a temporary lease for this building. We need a bridge. And that will cost us a little bit more because it may only be for a 3-year period. So we'd need a lease with an out clause, which we currently don't have. If we went and negotiated with our current owner, who's already made the verbal proposal, he'll give us our current rent. If we did a 10-year lease. So if we agreed to a 10-year lease, we could pay our current rent, which is X amount plus it goes up each year for a CPI increase. That's it. If we are tapped for the new building, as I mentioned, we then need to shore us up, give us a lease that will gap us between here and the time of a new building. Since we know that new buildings can be unpredictable the exact time, we would probably, in talking with Facilities Commission, do a 5-year lease with an out clause that if the building was finished in 2.5 years, we would be able to provide enough notice to then proceed on to and move to building downtown. Moving costs, we would have to absorb. Facilities Commission does not have that in their budget. So if we are to move, we would have to absorb whatever the cost is to actually physically move assets, et cetera, down to the new building. I hope I answered all your questions.
You did. So there's no play as far as concerned, so we still have the same lease agreement and all, and payment for the next budget?
For the next budget, no. For 2021, sometime next year we have to have a new lease signed one way or another. We need decisions and we need to make some changes, new contract, what have you, to be able to execute on. And so therefore 2021 hopefully we'll know by the time we're presenting that budget in April to know, are we needing to increase facilities? Are we at a 10-year lease where it's fairly flat each year going forward? And we'll be able to have that discussion.
Mr. Martin, do you take the lead on all of this?
I take the lead from the communication standpoint. The decisions are really up to the board, the commissioner, but I've been the main communication to Texas Facilities Commission and trying to get information and so on, but it's not been very forthcoming.
Who owns this building?
Anderson, 1200 Anderson Partners, I believe is the name.
Do you know much about them?
I do. Actually, the building owner probably comes in about once a month, check on things, et cetera. He has a couple buildings and has this one. And we've had dialogue with Facilities Commission on their leasing side. So there's a leasing side that we talk to when we're trying to, we need a new contract, we want to renew our lease. But then there's the new building side that are completely separate within the Facilities Commission. So we've definitely had conversations on both sides to make sure, if this goes through, do we have a contingency, and how would this work out from our lease? So that's how we know. But decisions on us and the new building and selection, et cetera, how the selection is going to occur, it's been a year and a half, and they still have not
So
decided.
what I would like to ask the both chairmen, Chairman Stedman and Chairman Steen, is that I think that it's important for you and your group to report to this committee, especially because we're getting close on time, the progress of that, and if there's anything this committee or the commissioner can do to help get us more information. That's going to be a very big decision, and it'll come here before we know it. So I think it's important to maybe have a little bit more reporting on that to the AOC committee.
And I'm more than happy to. Just give you some background. There are items we were tapped probably about a year and a half ago, and they said we're building new buildings, and the coordinating board as well as many other agencies are selected to be potentially moving to these new buildings. And so we met with them, and at that point it's very early on in the stage, so not a lot of answers. But we did give them a breakout of staffing, of conference room needs, boardroom needs, and because our concern was how will you be able to support the agency? They want to have a shared conference center. So I think the first and second floor is going to be this conference center. I don't know how those rooms get scheduled, how they'll get booked, but they did not have any plans for a boardroom at the time, and I don't know if they do or not. So that was a red flag concern of how do we as an agency, if you put us in this building, continue to operate appropriately. Parking will be a parking garage under the building, I believe. There will not be assigned parking, and so, question was, what about board members, commissioner, individuals that come to the board meetings, et cetera. So we've shared a lot of information and shared a lot of concerns with the Facilities Commission about this. But again, it's getting decisions.
How long have we been in this building?
9 years from the last contract renewal, and I'm not sure how many prior to that.
We moved in 2000, so 19 years.
19 years. Anybody around? Where were we before that?
We're off of Chevy Chase and 183, so just across from IH-35 along this 183. So we weren't too far away. That building, there were multiple buildings, and I wasn't with the coordinating board when they were over there, but I did visit. I went to meetings there. But David's been here. He's probably the only one in the room long enough. Of course, Mary, too. But yes, there are certainly pros and cons to moving. I think, being closer to the Capitol is a nice idea for those of us who work with the legislature. But I think for the rest of the majority of the employees, I think there's some trepidation to having to deal with traffic, downtown traffic, and that sort of thing. We also, I think the landlord has been very responsive to any issues that we have with the building, very quick to maintain and so forth. And if we move into a state building, then we are reliant on TFC, which, I don't know if you've seen some of the older buildings downtown. They're really not attractive, but this will be a new building, so that's the good news. But in terms of the space, as Ken was talking about, we have hundreds of meetings a year here. And this boardroom, accommodates pretty much meetings almost every day of the week. We have multiple meeting rooms in the agency, and there's often times where we don't have availability.
Well,
So-
that's, of course, we want our state, to be efficient, and it sounds like that's what they're aiming for in the new building. So in other words, rather than each occupant having a conference room, they want to try to.
Sure,
But that
and we
model
looked at
might
it from
not
a.
suit us. Yeah.
We looked at it from a cost-efficient perspective. Will we be saving the state money by moving into a state-owned building? And the answer is no. Well, we don't know for sure at this time because we are going to have to pay rent, for lack of a better term.
Share services.
Share services. But here, the general revenue that comes from the state to support the lease is,
About 500,000.
okay, and the rest we use student loan funds
Loan funds.
because third of our agency is the student loan program. So that's non-general revenue that's going to support of this building. So do we save the state any more money by moving? That's still up in the air, and we're
Well,
going
I
to look
think
at that.
that's what I'm requesting, is basically looking at that in detail. And we've got some time, but we kind of sort of don't have some time. But, you know, the thing is, we need to start these discussions. We don't have to spend a lot more time on this, but I think it's important,
Oh, it's
Chairman, to
important.
look at that.
No, it's good to bring it up. Mr. Martin, you mentioned the owner of this building. You said it was something like the 1200 Anderson Partnership or something. But who's the landlord? Who's the person that comes by here?
Michael.
But on Michael, you can't remember.
Michael. Yeah. Let me pull up my email and I'll find it. I can get that for you.
Okay, no problem.
I don't have it off the top of my head.
Kind of just disinterested in that. All right. Any other questions or comments? Go ahead.
Okay, just one question on the building decision. Is that the coordinating board's decision?
The coordinating board has the option to decline. If the coordinating board decided that, thank you, appreciate the nomination, but we request to not be considered, that is an option for
It
the
just
board.
seems strange because they're building the building. I mean, I see it, you know, it's right across from the Blanton, right? Museum, pretty much, yeah, right across from the Bullock. Right. Yeah.
Yeah.
So it would be hard to imagine that they're building this building and they don't know, like, who's going to be in it yet. And anyway, when do you think this decision will be made?
I echo your concern. I know it's rhetorical, if it's hard to imagine, but it is real. They have not built a new building since, I think, 2001 or 2002. So the Facilities Commission has not performed this. So most of those people that were there at that time have retired. When will they make a decision? We don't know. They won't give us one. I just recently, probably less than 30 days ago, followed up with the assistant executive director. And
Well, anyway, so
we're not getting the answers we'd desire.
right, but it's our decision, coordinating board's decision to move there or not. Correct.
Is it the board's decision?
I think it can easily be the board's decision. I think that there are items that the board, there are risks, as Ms. Battles mentioned, that the board needs to consider. There are a lot of I'm concerned. I'll just say that. I'm concerned because there are a lot of unknowns. Our lease is up in less than a year. It's about 11 months left in a lease. So there was a building, Michael Powers, thank you, Mr. Bill France.
Well, anyway,
Now I
yeah,
remember.
Ken,
So-
if I can just stop you there. I mean, every time we talk about this, you kind of talk about this extension and, oh my gosh, you know, we're going to look, who on earth is going to lease this building? Okay, that's my sort of thing. In other words, I think you're in a good position, but who makes the decision, go or no go, into, this new state building? At some point, they're going to have it built, and they're going to say, make a decision. So you say we have the option, the coordinating board, and I presume that ultimately is a board decision? Or is it staff decision or commissioner decision?
The precedence has been the board.
Yeah.
So
Yeah,
when
okay,
we
right.
renewed the lease 10 years ago, 9 years ago now,
Well,
the
anyway,
board weighed in.
Yeah,
So
but we want to move on, but just to echo what Dr. Faria says, I mean, let's kind of get more involved, get the board more involved and report about what's going on and what the issues are, because the only thing, when it all comes up, it's always you talk about, well, I just don't know if we renew, we're going to be in a bad negotiating position. When the real issue is, are we moving or not? So anyway, let me ask you another question. So on the agency operating budget, the 31.196, that is all the employees here, it's the leases, it's everything. None of the employee costs are allocated to the trustee budget. Is that right?
Let me, yes and no. I'll say the majority, in the past, that would be a correct statement, that none of the employee costs are within the programs. This last legislative session, two things happened. The Peace Officer Loan Repayment Program, they appropriated staff and they gave us administrative funding. They gave us administrative funding in the strategy, which is in our trust deed area, which is unusual.
Sorry to cut you off, but I mean, just sort of order of magnitude, I mean, except for maybe.
Except for maybe $200,000.
Yeah, okay. So
very,
okay.
very small.
And then second question, the general revenue dedicated and all other funds, the all other funds are the indirect bond funds, the monies.
Loan program funds.
From the loan program funds.
Correct. The majority of that.
All right, that's my question. Thanks.
Yeah.
Just a quick comment. So we've got expertise on this board, and I'm thinking of Welcome Wilson. Just wondering if you ought to, right? He's big-time commercial real estate. Maybe that's somebody you could check in with, and so that if you need to call him, he could give you some good advice about
Absolutely,
things.
that'd be
Yeah,
great.
Okay.
We can do that.
Any other questions or comments? Do we have a motion to adopt the agency's operating budget for fiscal year 2020? By Mr. Anwar,
Second.
second by Dr. Farias. Any discussion? All in favor say aye.
Aye.
Any opposed? Motion passes. So I rushed in here and started this meeting, and I'm seeing a new face, at least for me. So, Ms. McKenzie, welcome to the Agency Operations Committee. So Chairman Stedman has told me you've already gone to a couple of committee meetings already, so this is not your first time in this room, but tomorrow's your first board meeting, right? Oh, good. Put you on the spot. Tell me a little bit about yourself.
Well, for those of you who haven't met yet, my name is Lauren McKenzie, and I go to Texas Tech. I am a senior this year studying human sciences. And yes, this is my second time here, third committee meeting,
Good.
and I'm really enjoying it, and I thank you all for welcoming me.
Good, good. I'm sorry I overlooked that when I rushed in here. Thank you very much. Okay. So, the first item under internal audit is discussion of the agency-wide financial statements for the fiscal year ended August 31, 2018 by KPMG LLP. This item does not require any action. Representatives from KPMG will present the report to the committee.
Thank you for the opportunity to be here. I have with me Chris Stone, who's the IT director today, to help make the presentation for the 18 financial statements. You have this slide deck with you in front of you. Just want to walk through the team and basically the results of the audit for the 2018 audit, which is what you're looking forward to. So just here's our pretty pictures of who's on the team. Chris and I are here today to present the results from that perspective. So the overall results of the audit was they were unmodified clean opinion. That's what you want. There was no significant adjustments or no significant material weaknesses or significant deficiencies to bring to your attention. So no control issues, no adjustments made to the numbers that you saw for the August 31st 18 numbers. They stood as they were when we were finished with the audit. The significant accounting policies, how you come up with those numbers and how you accrue them and put them in the financial statements, are disclosed in Note 1. It is worthy to note there was a new GASB that we implemented for 18. We mentioned it during the planning session in April. It's the one about OPEB or other post-employment benefits, where you put the liability on the books for basically your health insurance and the insurance side of it. If you remember 2 years ago, we had to put the pension costs on the books like we do in the corporate world. And so GASB 75 was implemented this year. If you've looked at the financial statements, that liability is $48 million. So your liabilities went up $48 million by adding that OPEB number to your financials. Other than the implementation of the new standard, there was no unusual transactions in the 18 audit from that perspective. There is the estimate in the financial statements, which you're well aware of, related to the allowance for doubtful accounts for student loans. We do take a pretty hard look at that, look at the trends, look at the assumptions, and you can see from the slide that we found everything to be reasonable in accordance with industry standards. This slide is all the other things that if they happen during the audit, we would be required to tell you about. The only thing on here is the financial statements. There is a management discussion, or MD&A, at the front of the report, and there are some required schedules at the back. Those are actually outside the true financial statements, which is your balance sheet, your income statement, and your footnotes. But we do look at all that since it's considered to get combined together. And basically what this tells you is we looked at it and we didn't see anything incorrect or didn't tick and tie, if you will, to the actual audit itself. And then there is the management representation letter, which is in the official report that has been given to you, where management has signed off at the end of the audit, letting us know that everything they've told us was true and accurate. Any questions?
Any questions or comments? I thought, we don't, does the full board adopt this or not? But not us.
Sorry, this is just a discussion item. They're reporting back to you the results, but they don't adopt.
But tomorrow, is it on the agenda for tomorrow?
No.
Okay, I'm involved in some organizations where we actually approve it or adopt it, yeah.
There are some organizations where the boards do, but usually that's in the for-profit or the not-for-profit world. Most government entities do not.
All right.
So.
Well, I'm involved in one that does, so.
Okay.
All right.
There you go.
All right.
The rest of the deck, the supplemental communications, is just the reminders of the things we talked about in April. I don't intend to go through them unless you have questions. It's just the responsibilities of management, the board, and KPMG as based upon who's responsible for what during the audit.
So we had a conversation about this.
Yes, sir, we did.
And this is about as good as it gets, right?
It is.
Yeah.
We don't even have any verbal comments to discuss.
So-
You'll notice this is the end of the deck.
Commissioner, but you know, we want to pause and say good work on this, and Ms. Battles and others. Everybody out there, you know, we're basically, or we are volunteers, you know, doing this. So this gives us a
Yes, it was a very good audit.
lot of confidence. And anyway, we're proud of you all. Thank you. Yeah.
Well, I did very little, but had a lot of colleagues who've taken very good care of our responsibilities. Ken notably, and Linda. So the credit goes mostly to them.
Yes.
So, I mean, part of the reason maybe the reason we pay for this audit independently is kind of the sleep, we can sleep at night kind of idea. And so it sounds like, you know, if there was extreme sloppiness, you know, and things weren't, you know, managed, the financial side of the business was not managed correctly, you would have picked that up. Is that right?
Yes, sir. Because we do a lot of what we call internal control or financial reporting testing. So we go to see, you know, basically what the processes are that you're describing, what the monthly close process looks like, how you make journal entries, how you compare budget to actual. We have a bunch of conversations about that and actually do some testing of that to kind of get what we call the control environment. So what does that really look like? And then from there, we design our test work to actually look at the detailed transactions on a test basis, obviously sampling, to see if it lines up with what management has told us their processes and policies are. We didn't notice any material discrepancies in that. I mean, we are going to find something that's missing a piece of paper or is off by $1 or something like that, but that's just normal human behavior, if you will. So that's not something that we report. We don't consider that to be an issue.
Yeah, maybe I'm not material, but you know, so anyway, this is a really good indication. I mean, one of the problems, not a problem, but you know, we are looking way back, right? I mean, this is what, at least a year ago, right?
Yes, sir.
Financial, yeah.
Right, because
So-
we're almost up to 19 now.
Right, but
Yes.
what we're really looking for, and what we're seeing, and what you're telling us is that, hey, this is a pretty well-run outfit,
It is.
and typically well-run outfits don't just come off the rails. You know, just
Usually not. There
Yeah.
usually is some type of significant change in operations, often a new IT system, or, turnover in the significant turnover in your accounting function, like if you were to lose your CFO, your controller, your accounting manager all at once, things like that, those do tend to bring up things that would not be expected. It's not intentional errors. It's just things that happen because you lose your knowledge base, or you have a new IT system that wasn't designed correctly. Those are generally where once you get up and running in a clear capacity, those are generally the things that cause us to say, oops, sorry, I have something I need to report to you this year.
Well, thank you. Anyway, just, kudos to everybody, Ken and Linda,
Yes.
Commissioner, because that sleep at night comfort is really important to us.
And I would also say that Ken and Mark and Linda and the team, we talk throughout the year. That makes a tremendous difference in having a clean audit. So if they're dealing with some new legislature rule that got passed that's going to change something, or Jen's looking at making some enhancement to the computer system, she calls Chris. So we're involved along the way so that we don't get to the end and have a surprise.
Yeah.
I will tell you that's a very important trait of a solid management team.
Well, I should have mentioned Mark and Jen because they're obviously a big part of that whole team. So anyway, good job.
Yeah, I think we have that, we have a conversation. That's a question I try to ask when
Yes,
it's
sir.
just the two of us talking.
We
Is
do.
there anything that you came across that would be of concern? I ask you that, and
Not this year.
not this year. That you,
sir.
so that's
I'll
reassuring.
never say never, but I'll just say not this year.
Ms. McKenzie, so, we're all volunteers here. There's a fiduciary responsibility. There's a lot entrusted. It's a complex organization. So I always say these auditors are like our best friends. And when they tell us everything is in good shape, it's a good feeling. Yeah. All right.
All right, that's all we have.
Thank you, Ms. Warren.
Thank you.
Mr. Stone, you want to say anything?
Fortunately, I don't have anything to say because of the clean shop that Jen is running. So if I did have a lot to say, there'd be a lot more to be nervous about. But this is good news that I'm not talking.
Okay. Thank you, sir. All right, thank you very much. The next item under internal audit is consideration of adopting the Commissioner's recommendation to the committee relating to the annual internal audit plan for fiscal year 2020. Mr. Mark Pale, Director, Internal Audit and Compliance, will present this item and be available to answer questions. Mr. Pale.
Excuse me. Thank you, Mr. Steen, Mr. Chair, and members. So each year we develop a plan to present to you to outline the engagements for the coming fiscal year. This plan allocates our internal audit resources to the risk-based universe of these activities and covers those areas that represent the greatest risk based on some risk factors such as the dollar magnitude of programs and how long it's been since we've reviewed a program are a couple of the key factors. And the plan was crafted based on the resources of 3 staff for the internal audit function. You'll see from the plan in your materials that our planned work for the coming year includes major areas such as information security, bonds, human resources, and contract management. We also follow up on corrective action implementation for our reports, and we assist KPMG, our external auditors, to the tune of 50 hours each year for their financial statement audit, as well as performing investigative activities, oftentimes based on referrals from the state auditor's office. I have one, in addition to the plan, I have one additional item that you should have at your places today that's part of this discussion. Yeah, the document would look like this. This helps give you a perspective of what we have and have not covered in our universe of audit activities over the last 7 years. So it's basically kind of a roadmap of where we've been, where other audit organizations have focused their efforts, so you can see what's been reviewed and then some of the areas that haven't been touched upon in some time. So this is an audit coverage map. So you can see, for example, some areas that get coverage every year, like elements of information security, or the financial areas covered by KPMG in their external audit. Other areas, it's been some time since we've, either us or other audit entities have cycled through some of the other areas. Auditing standards require that you be kept informed of the decisions that you make as a board regarding the staffing of the internal audit function. So this gives you a perspective based on the staffing and our resources that we have available of what we're able to cover and what we're are not able to cover over a period of time. Of course, we will continue to assess risk and to apply our limited resources to those areas that possess the greatest risk. And with that, I'll be happy to answer any questions that you may have.
So, Mr. Pale, looking at this, I guess what would, looking at your audit coverage, 7-year history, sorted by magnitude. So if you look at run your eye down there, the first one you come across that we haven't looked at in 6 or 7 years is the Baylor College of Medicine, and 37 million, whatever.
That's correct. So that would be very likely to be selected on the next.
But maybe
next
you could
audit.
explain why you'd see that drought there, but then you could go right under that and look at Perkins, 30 million, and it looks like you're doing it every year. Is that am
Yes.
I reading that right?
It really, it depends on, you mentioned the complexity a moment ago of our organization, and certainly those programs vary in complexity. And so some programs are more of purely an allocation basis. So even though the dollars may be very high, the risk may not correspond with the dollar magnitude of the program.
Is Baylor College of Medicine a good example of that?
Yes. So it really depends on how those programs are structured. And so the Perkins one that you see that's covered every year, that's a federal program, and there's significant amount of compliance aspects of the numerous institutions that those funds get allocated to, and you'll recall like Coastal Bend College is a fairly recent example of significant compliance issues in how those federal dollars were spent. So we do spend a lot of effort on a program like that year after year, just because of the complexity and because of the number of issues that we see.
Sorry, but of the ones that are just blank right across, which one concerns you most? And I'm talking about divisions that haven't been looked at in 6 or 7 years.
I would actually say that if you flip towards the back of the document, so if you go to pages, if you see all the information solutions and services areas, even though we have coverage in those areas, and KPMG as well, they provide a significant amount of coverage, just the sheer inherent risk of information security, cybersecurity, all the trove of information that we have in this organization, that's a continuing concern of mine. So that's one that
Which one is that again?
That's, if you look at page, starting on page 4 of 6, and you see to the far right-hand side how there's kind of continual shading of those areas. There's a lot of oversight in that area, different entities looking at our information security. You're about to receive an executive session briefing from a benchmarking standpoint of information security here at this agency. But that's one that warrants that much effort. And so that's one that's a continuing concern of mine. And really, when you talk about the value brought by a group like KPMG, Chris Stone, who is just sitting at this table, they have a very in-depth, comprehensive practice of auditing information security, which is a very valuable commodity. And so part of the money that this agency, that this board supports, that annual audit is very important for looking at, the information security of our loan program, for example, and all of our student loan records. It really kind of depends on it's not necessarily just those that where you see white and you see no coverage. That's not necessarily where my greatest concern is. My concern would be more subject-oriented and where's the greatest inherent risk and are we continuing to provide coverage? And so information security would be at the top of my list.
Thank you. Any other questions or comments?
Mark, on access control, I mean, all the way through until the fiscal year 2019, it wasn't done. Is there any particular reason why?
Access control is showing the green shading? Yes. So that's the reason that, that we show that in that capacity is that every one of our projects, everything, you know, in today's business environment, it has an information systems component to it. So the projects that we have on the plan for your approval, for example, for this coming year, every one of those projects is going to have some information systems aspect to it. So we're continually, particularly in the access area, we're always looking, if the audit is human resources, for example, that doesn't sound like an IT audit, but we're looking at access to those key systems to make sure that there's not inappropriate access, to make sure that when an employee leaves that works in HR, that it's cut off, all those sorts of things. So that's why you see the shading going across, is because we're validating those access, the appropriateness of that in other audit projects. I think that is a Microsoft Excel shading error. It should show 2019 as well. Yes, I'm sorry. Yes.
Good catch, Dr. Fries.
Yes.
Okay. Any other questions or comments? Do I have a motion to adopt the annual internal audit plan for fiscal year 2020? By Mr. Stedman. Is there a second? Dr. Farias. Any further discussion? All in favor say aye. Any opposed? Motion carries. The last item under internal audit is update on internal audit reports and activities. This item does not require any action. Mr. Pale.
Thank you. We completed 2 internal audit projects since the April Agency Operations Committee meeting, and both of those reports are in your materials today. One project was a final report over the formula funding process that the agency uses to distribute the formula funding to community colleges in particular, which was approximately $1.9 billion for the 2018-2019 biennium. Overall, we felt the processes were well controlled. This is an example of one of those areas, so that definitely should have been shaded because we did make a recommendation to improve access controls to limit internal access to the data that's used in these processes, so that was a good catch. Our other project closed a complaint regarding access to research data and competitive grant vendor selection. The complaint was unable to be substantiated. However, we are continuing to study controls over competitive grant administration as part of our contract administration project that is currently nearing completion, and so we expect to possibly have some recommendations to enhance internal controls in that area, but the actual complaint itself we consider to be resolved.
Questions or comments?
Okay, so I saw this, I don't know why the first time, saw it earlier and I saw it here. What's 10 pay?
That's the distribution process at the state. That's how many times community colleges get disbursements during the year for formula funding. It goes out in 10 installments. So they call it the 10 pay system.
How do universities do it? How do you do it for universities?
We don't manage the university's formula funding dollars.
They get it directly?
Yes.
Okay. Is 10 pay the most efficient way to do it?
You know, that's a decision that is made. I don't know the answer to that question. It's been like that. I've been in higher ed since 1989, and it was called 10 pay at that time. So I don't, you know,
Okay,
I don't
I'm
know
not
that it's ever been
suggesting
like
we rock the boat, so thank you.
So I think that before we move on to compliance monitoring, you told me everybody has to be out of here by 4, is that? Okay, and so how long are you going to take on compliance monitoring?
It'll be very fast.
And then we
yes.
have an executive session. How long will that take?
I think we can be done in 20 to 30 minutes.
Oh, good. So I think we're
depending on your questions.
in good shape. All right. The first item under compliance monitoring is consideration of adopting the Commissioner's recommendation to the committee relating to the annual compliance monitoring plan for fiscal year 2020. Mr. Pale.
Our enabling legislation goes back to the 83rd session in 2013, and it calls for the development of a risk-based compliance monitoring plan, again, based on some risk factors, much like on the internal audit side, such as the dollar significance of programs, as well as how long it's been since an institution's programs have been reviewed. You'll recall that we had an exceptional item request for this session that just ended to expand our compliance monitoring staff, but that effort was unfortunately not successful. So the plan in your materials uses the resources of our 4 existing compliance monitoring staff to perform audits and desk reviews at institutions around the state. Our work is divided between looking at the accuracy of formula funding information and looking at the compliant administration of funds overseen or trusteed to the coordinating board. Additionally, we do follow-up audits to ensure that our prior recommendations have been addressed by institutions. The plan you have in your materials has 20 new engagements plus 7 follow-up engagements covering an array of institution sizes and types, and it, again, applies compliance monitoring resources in a risk-based approach. I'll be happy to answer any questions that you have about the plan.
Questions or comments? What are you, show me what we're supposed to be looking at. You said it's in the materials. What does it look like?
It's it's just a Microsoft Word document with the listing of projects. It's in your
booklet, okay.
Yes.
I still don't see it. Okay. Oh, well, it's in this booklet. Okay. Okay. Sorry. All right. All right.
So, I guess, Ms. Battles, or, in trying to get the more FTEs in your department, I just remember trying to move the audit cycle from 10 years to 5 years.
Yes.
Right, for things like Texas grants and stuff.
Correct.
Well, but you have all this risk assessment language. So some get audited more frequently than, say, a 10-year cycle because of a perceived risk.
That's correct.
What would be the risk that you would identify?
Well, some programs are more complex than others. For instance, we've had, we're in our second project currently underway for nursing shortage reduction program. And you'll recall from Coastal Bend that was, there were a lot of issues around that program. That's a legislatively fairly complex program to administer. And so, so that program itself possesses more risk than a program that's
So that's an example,
defined.
right, of a program, but then are you targeting, well, we think that this institution is not handling things correctly.
That's part of it.
Part of it, okay.
Yes, yes, it is. And we reach out to, in addition to reaching out to the board, I have discussions with KPMG, with the state auditor's office, trying to get as much input, and our own program staff. They're working on a daily basis with these institutions, and so they understand institutions that don't meet deadlines, that submit things incorrectly, and so we're getting that kind of feedback as well.
That's good. All right.
Any other questions or comments? If not, do I have a motion to adopt the annual compliance monitoring plan for fiscal year 2020? Dr. Frias makes the motion. Mr. Anwar seconds. Any discussion? All in favor say aye. Any opposed? Motion passes. The last item under compliance monitoring is an update on compliance monitoring reports and activities. This item does not require any action. Mr. Pale?
Thank you. We completed 11 projects since our previous meeting in April, and you have the reports in your agenda materials. So I'll talk about a couple of those projects very quickly. Two of the engagements, formula funding at McLennan Community College and formula funding at A&M Kingsville, had findings related to the institution's needs to enhance controls over information security. Because this is a recurring issue kind of area, we worked with the commissioner and recently issued a statewide memorandum under the commissioner's signature in an attempt to better educate stakeholders regarding these recurring findings and the need to be more vigilant in this difficult area. Lastly, we completed, in the materials, you'll see the completion of a second time period of a teacher quality grant that was at the University of Texas Permian Basin. You may recall from the April meeting that the initial time period reviewed for this grant resulted in $186,000 in question costs. The report that you have in the July packet is for the second time period of the grant, and that resulted in an additional $82,000 in question costs. While this particular grant has concluded, we have additional work scheduled at Permian Basin to assess the administration of the nursing shortage reduction program, and that's scheduled to begin here fairly soon. That covers my report. I'll be happy to answer any questions.
Any questions or comments? Mr. Pale, thank you, and I always say you're doing an outstanding job. We appreciate all your good work.
Thank you, Mr. Steen.
So now the committee will meet in a closed meeting to deliberate the following matters. Pursuant to Texas Government Code 551.076 and 551.089, the committee will meet in closed session to discuss security recommendations from a Department of Information Resources contractor. Ms. Jinjin Sun, Assistant Commissioner for Information and Services Chief Information Officer, will be available to answer questions. No other business of the committee will be discussed before we reconvene in open session, and the time is 3:14 p.m. So let's go into executive session.
And it's too complex. Devote the time to.
The executive session has concluded. No action was taken during the executive session. The time is 3:53 p.m. The committee is now reconvened in regular session. This concludes the Committee on Agency Operations meeting. Do I have a motion to adjourn?
Before we make that motion, I just want to make a comment. This was like really good. We had a great, audit report. We had a great cybersecurity report. And I just want to thank you, John, for your service on this committee as chairman of the AOC, because I think you really made a difference. And in making sure, I know we had the budget crunch back a couple of sessions, the last session maybe, and there was some discussion and hand-wringing about whether to do the audit at all, and you basically said, no, we're gonna do it, and you were absolutely right. The cybersecurity emphasis. Anyway, so you've made a huge contribution, and personally, I'll miss having you as chair of AOC.
Thank you very much. Appreciate that.
I'd like to echo that as well. Mr.
Thank you.
Steen, thank you. You've made a big contribution to this committee and for the board over the years, so thank you so much for your leadership.
Good. Appreciate it. Thank you. All right, so I need a motion to adjourn. Did we? Okay, Dr. Farias, second. Mr. Anwar, any discussion? All in favor say aye.
Aye.
The meeting's adjourned.